New home loans fall at the fastest pace in 2 years. Why is it so hard to get a home loan in Australia lately? Home loan rejection rate hits 40%. Mortgage lending, which surged to record heights, has faced a tipping point in the past months, with new home loans falling at the fastest pace in 2 years. This is mainly due to rising borrowing costs, with 8 rate rises and the current cost of living crisis have all added to the difficulty of getting a home loan approved. Today, we're going to show you the exact tips in getting your home loan approved by the banks, including why labeling a bank transfer to one of your friends as money for explicit drugs or adult nappies as one surefire way to get knocked back. Let's dive in. I was in the office when I received a new inquiry from Jake, who's based in Melbourne's eastern suburbs. The first question he asked is if we can help him even though he's based in Melbourne, given that we're in Brisbane. I said we sure can, as we deal with home buyers right around Australia. You see, Jake was upset. He informed me that he went to the bank to apply for a home loan on a house he just purchased, but the bank declined his application due to not having enough borrowing capability. Jake was devastated and didn't know what to do next. He explained to me he'd only spoken to the bank a month ago, and they said he was good to go, that he'd been working towards purchasing his first home for months. He was counting on the loan to secure the purchase. Jake was calling me to see if there was anything we could do to salvage the situation. I let him know that not all banks have the same borrowing power assessment, and there's things we can do to increase his borrowing ability, which we'll cover later in the video, and suggested we can look into other lending options. As well, we shared with him how we'd successfully helped other clients who'd been in similar situations as he'd been in, and how they succeeded. Which brings us to the first tip in getting your home loan approved by the bank. Tip number 1, borrowing power changes from lender to lender. Your borrowing power can vary a lot between the different lenders, but switching banks isn't the only way you can increase the amount they can lend you. Each bank has unique home lending policies and assess risk in different ways. For example, one bank might only take 80% of your overtime, whereas others might take 100%, which makes a huge difference to the amount you can borrow. So it's important to have a lot of different banks to choose from, which will allow you to find the right one that'll work for you. This is where working with a mortgage broker makes a lot of sense here. As a mortgage broker, we work with a range of different lenders and help find the one that'll suit you best. Feel free to reach out with us directly. Our details are below. With interest rates expected to continue rising over the months ahead, it's important for borrowers to be aware of their bank's terms on their pre-approval. With some lenders, they won't honor the pre-approved loan amount for the 90 days that the pre-approval is valid for if interest rates rise. With other lenders, they'll absolutely honor it for the 90-day period, which means for some lenders who had issued a pre-approval when, say, interest rates were 3%, may not honor your pre-approved loan amount given the rates have now changed and are hovering around that 4.5–5% mark. Tip number 2 is you've made too many joke transactions. It might be funny to label a bank transfer to one of your friends as money for explicit drugs or adult nappies, and let's face it, it is funny at the time, but it also might cost you down the line. It's never fun when a bank assessor calls you and asks about these transactions. Remember, the bank doesn't know who and who isn't your friend. So when they go through your bank statements and see multiple transfers titled as bail money, they might not realize it's a joke. It's not guaranteed you're going to get your home loan rejected, but it's a good idea to cut back on these silly transactions because the bank certainly does ask questions around it. Tip number 3 is reduce your credit card limit. It's not just your credit card debt that can send your application packing. Simply having a credit card at all can work against you, especially if it has a high limit. The bank will assess your ability to repay the credit card limit you have and will judge the whole limit as a potential debt. A lot of borrowers believe that it's the owing amount on the credit card that'll be taken into consideration. Unfortunately, it's not. It's the credit card limit. It doesn't matter if you only owe $1,000 on the credit card. If you have a $15,000 credit card limit, the bank's going to take into account the $15,000 limit as a liability. To give you an example, for every $10,000 in credit card limit you have, your borrowing power is reduced by about $70,000. Before applying for a home loan, it might be wise to lower your credit card limit beforehand. Tip number 4 is buying a difficult property. It used to be the case that buying a unique property with a helipad caused issues. Unfortunately, banks have been even more particular with the types of properties that they'll lend on nowadays. Some banks have restrictions on lending on units, whilst others have restrictions based on bushfires and flooding zones. In other cases, some lenders will be okay with lending on apartments, but will have restrictions based on the suburb or postcode the unit's located in. Sometimes they'll have restrictions on high density or inner city locations, others on how many floors a block of apartments has. Some having restrictions if the property is 4 or more stories, as well as other lenders having restrictions if the property is less than 40 square meters. And if you can get past all that, some lenders won't lend if they already have too much lending in that building. Regardless of all these limitations, you can still get your loan approved by going with the bank that's going to be happy with the type of property. And once again, this is where working with a mortgage broker can help here. Tip number 5 is if you've been employed for less than 12 months in your job. Lots of banks will want you to be in your current job for at least 6 to 12 months to be able to borrow with less than a 20% deposit. In other words, if you're borrowing more than 80% of the property value with lender's mortgage insurance, you'll get your loan declined. Not to worry here, because there are some lenders that will lend to you even if you've just started in the position. Once again, it's all about working with the right bank here. Tip number 6, small deposit. These days, you'll need 8 to 10% of the property value as a deposit for a home loan. But there are situations where you can use a guarantor to be able to lend up to 100% of the property value plus additional costs. There's also the home guarantee scheme that allows you to lend up to 95% of the property value without having to pay lender's mortgage insurance, meaning you'd need as little as a 5% deposit. Banks all have different requirements and lending policies, and a small deposit to one bank is completely fine to another. Some lenders require you to provide a genuine record of your savings to show consistent contributions over the last 3 months. Your chance of approval can be affected by this. This also ties into having proof of a reliable and stable income. Tip number 7 is you've recently gone into maternal leave. Unfortunately, things can get a bit complicated if you've recently applied for a home loan and gone on maternity leave at the same time. While on maternity leave, your income is likely to reduce or be non-existent for a period of time, which can put most lenders off unless there's another strong income in the household. There are some potential solutions to this. Most banks will like to see that you've got a cash buffer to cover any shortfalls whilst you're on leave, along with a letter from the employer stating the return date, along with a salary upon returning to assist. In general, it's wise not to make any major life-changing decisions amid a loan application. If you are expecting or about to go on maternity leave, there are still solutions out there, so feel confident. Tip number 8 is you didn't disclose everything. Leaving some financial information out of an application may not be the best idea. Lenders have access to bank statements and will most certainly find out if you have any expenses, debts, or accounts you failed to disclose or are trying to hide. Add to this that most lenders have access to active credit reporting, which shows any credit facilities that you have, including how good you've been at meeting your payments and keeping on time. Tip number 8 is you have less than a stellar credit history. A history of not being able to pay your loans on time may not go down with some lenders, as this shows you don't have capacity to stay on top of your bill deadlines. 2 years of good credit history is enough for the banks to decide if you're a great candidate. Not to worry if you don't have 2 years good credit history. There's things you can do to improve your credit file, such as working with a credit repair agency that might be able to fix any blemishes that you have. Tip number 10, lenders typically are less likely to approve contractors because their income is less stable. Banks typically treat contractors like casual employees with irregular work hours. They also like to see at least a few months of steady employment, not job hopping, which is what contracting can appear to the lenders. Add to that, not being employed for a long enough period is another reason why the bank might reject your application. Typically, the banks are after 3 to 6 months employment with the same employer for a contracting or casual role. There are some lenders that can work with less than 3 to 6 months history here, but it all depends on your industry experience and what you've been doing in the past. Usually the banks want to see 2 years industry experience here. What do you do if your home loan's declined? Don't worry, these days it's more common than not for the bank to decline your home loan application. The first thing to do is speak with a mortgage broker to discuss your situation. Did you know here at Hunter Galloway, we're mortgage brokers that deal with people Australia-wide? So if you're looking for a great mortgage broker, call us on 1300 088 065 or visit our website huntergalloway.com.au and fill in our contact form.